And welcome to the preview for the Bank of England's quarterly inflation report. Now, ahead of today's reports, markets have really been accelerating their expectations for when the Bank of England will be the first major bank of the G7 to raise interest rates. Now, this would be from historic lows of 0.5%, with the markets currently pricing in a hike at around Q1 2015. Most notably, that is before the general elections in 2015, so could potentially be a bit of a spike in George Osborne's punch as he does ride the wave of economic recovery heading in towards those polls next year. In terms of analyst expectations, the Bank of England are expected to somewhat raise their growth forecasts, although not to the same extent as we have seen at previous quarterly inflation reports, and cut their inflation outlook as the macroeconomic backdrop for the UK does continue to remain favourable, allowing business and investment to grow pretty steadily over the past calendar year. In terms of projections for slack in the economy, that's a pretty crucial measure that is worth keeping an eye on. Back in February, the Bank of England equated this to be at around the 1.0 to 1.5% mark, and analysts do expect the Bank of England to retain this line, not seeing too much of slack being eroded away over the past 3 months, which is one of their key metrics for when the Bank of England will consider hiking monetary policy. One thing that will take particular focus is any comments on the housing market, as analysts do expect the Bank of England to take action in June as from its financial policy arm, as opposed to its monetary policy arm, to take action on a housing bubble in the UK by potentially making mortgages slightly more stringent and the capacity with which banks have to lend slightly more strict, which would be tantamount to some sort of monetary tightening, although it would not come from the monetary policy arm, but from the credit side as opposed to the monetary supply side. Of course, we see that release at 10:30 London time. It does come on the heels of the latest jobs figures. These will likely take a backseat to that as Mark Carney and his MPC take the board to present the latest fact charts. Of course, we'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic day.